UTI Banking and Financial Services Fund. The banking and financial services sector, BFSI, is the backbone of an economy, seamlessly linking all facets of commerce within a country. Our daily lives are intricately intertwined with the BFSI sector, from savings to spending to securing loans, managing credit cards, investing, obtaining insurance, etc. It is the engine that drives our financial interactions, powering the economy forward with every transaction. The banking and financial services sector in itself is quite diversified, with subsectors like lending, life and non-life insurers, capital market players like AMCs, exchanges, rating agencies, brokers and fintech. As India's GDP continues its upward trajectory to reach its ambition of $5 trillion and $10 trillion economy, the BFSI sector emerges as a key facilitator strategically positioned to thrive alongside the nation's overall economic progress. With an evolving economic landscape and rising incomes, the demand for financial services is poised to soar, driving a surge in activities such as lending, investing, and risk management. Consider the lending sector, where the aspirations of a growing population intersect with the opportunities of a burgeoning economy. With increasing disposable incomes, there's a surge in demand for loans to fuel lifestyle upgrades. As demand increases, corporates also avail credit for business expansion and capital investments, which catalyzes growth in the economy. Further, it has been observed that as the capacity utilization moves from 75% to 80%, corporates also focus on capex, and it can be a meaningful driver for credit growth. To no surprise, credit has grown more than GDP at an average multiplier of 1.5x. In the capital markets sector, a digital revolution is reshaping the landscape of financial participation, from the widespread adoption of eKYC and Aadhaar-based authentication to the proliferation of smartphones and low-cost data plans. Digital infrastructure is fostering greater financial inclusion and accessibility. Furthermore, a notable shift in household savings from traditional assets to financial instruments underscores the growing allure of capital markets as a wealth creation avenue. However, we have just touched the surface of financialization of savings, with only 7% of our household savings in capital markets as compared to 22 to 50% in other peer countries. Meanwhile, in the realm of insurance, India presents a unique landscape ripe with opportunities for expansion and innovation, with a historically under-penetrated retail market, particularly in the segments such as life, health, and motor insurance. There's immense potential for growth and diversification as private market players gain traction and consumer awareness increases. The insurance sector is poised for a period of sustained growth and evolution. In addition to benefiting from favorable sectoral tailwinds, the BFSI sector stands in great shape with prudent risk management practices, stringent regulatory oversight, and a focus on asset quality. Banks and financial institutions within the sector have strong balance sheets characterized by ample capital buffers and prudent provisioning. Furthermore, the sector has witnessed a notable decline in non-performing assets (NPAs) and a healthy recovery in return on assets (ROA), signaling improving asset quality and operational efficiency. This positive trend underscores the sector's ability to capitalize on emerging opportunities. But how has the BFSI sector performed as compared to overall market historically? The Nifty Financial Services Index has outperformed the Nifty 50 since 2004. Looking at the valuations, the sector remains reasonably priced, offering investors an attractive entry point to participate in India's growth story. Banks, which constitute till the 75% of the benchmark index, are trading at multiples closer to long-term average. Introducing the UTI Banking and Financial Services Fund, an open-ended equity scheme investing in banking and financial services sector. The fund focuses on opportunities within India's BFSI sector. leveraging structural trends and cyclical tailwinds to aim for consistent performance relative to the benchmark. It also emphasizes investments in mid-cap and small-cap companies within the BFSI universe of over 100 names. The fund employs UTI's proprietary Score Alpha model to categorize the investment universe into 3 tiers. The core portfolio is strategically allocated to top-tier companies with a proven track record of consistent growth and impressive return ratios. Additionally, the fund tactically invests in Tier 2 and 3 companies, identifying those with turnaround potential poised to yield disproportionate returns. This dynamic approach allows the fund to optimize risk-adjusted returns while capitalizing on diverse opportunities across the spectrum of market conditions. With approximately 80% of its portfolio invested in banks and NBFCs, complemented by strategic exposures to a range of businesses beyond lending, insurance providers, capital market players, and fintech firms. The fund offers investors a well-rounded opportunity to participate in the growth story of India's BFSI sector. The fund has the potential to unlock alpha through strategic allocation to mid and small cap companies. This approach allows the fund to tap into niche themes with significant growth potential and a long runway for expansion. By actively seeking out opportunities in these segments, the fund aims to outperform traditional benchmarks and deliver reasonable returns to investors. For investors with an aggressive risk profile and a long-term investment horizon of 5 years or more, UTI Banking and Financial Services Fund offers a sustainable opportunity to participate in India's growth story and potentially achieve wealth creation. Invest in UTI Banking and Financial Services Fund as it offers exposure to NBFCs, insurance, capital market plays, fintech, and more beyond banks. Beyond large caps, higher allocation to mid and small caps within BFSI universe. Focuses on companies with demonstrated history of consistent growth and return ratio. Suitable for investors with high-risk appetite seeking high growth potential. To know more, contact your mutual fund distributor or registered investment advisor or call 86550 19940.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.